So yesterday, me and my team went into a short on US 30. It was a pretty crazy trade because we ended up catching 4,500 plus pips on this one setup. I'm gonna show you guys my exact breakdown, what I saw when I was going into this trade. And I really want you guys to get out of this video is just how to see eye to eye with me. Really catching 45 pips in a couple of hours trading indices is insane. And I want to put it into perspective for you guys. If you guys had a $1,000 trading account off that one trade, you could have made $450. You could have made a 45% return on your account with one single trade. If you had $10,000, you would have made $4,500. So just off this one trade, we were able to capitalize a lot of money. And not just that, but I want you guys to realize when you catch really good setups like that, it raises your confidence level as a trader. It makes you understand like, okay, what I'm doing obviously is working if I'm able to catch such a big move like that. So I want you guys to realize that indices are very, very scary to trade. This isn't something that anyone can just go into and be like, okay, let me see if I can trade indices. Usually when I'm trading indices, I'm not risking my account too much. I'm usually risking about like 5% of my account max. With Forex pairs, cryptos, I'm usually risking like 10%. And that varies for everyone. Some of you might be like, Colt, like, people tell me to only risk 1 to 3% of my account. That is perfectly fine. It's all personal preference. I am more of a risky trader. And really what it comes down to is like, if you see a setup that you are extremely confident in, and you know that that trade is gonna go the way that you intend it to go, there's really no reason as to why you can't over leverage your account just a little, especially if you have a tight stop loss. I have done previous videos on lot sizes for indices, and I also do have a little cheat code in there. Those videos should be on my videos, or on my channel, I should say. Also wanted to throw out the FX University is going to be launching November 27th, and I am gonna be giving you guys, literally I'm spilling all the fucking sauce on you guys. I'm gonna show you guys how I've been trading indices, how I've been so profitable, how you guys can do the same thing as well. And I really want you guys to just be open-minded to that opportunity. The waitlist is below. Make sure you get on that so you can get early bird access as well as the discounted price when it launches. And that course, it's gonna be around 18, I think we're aiming for about 16 to 20 hours for the whole course to be. It's gonna be, the whole length is gonna be between 16 and 20 hours long. And I also, I'm probably gonna add in content like every month. I'll add in trade updates, maybe setups that I'm going into, live webinar, just a ton of good information because me as a trader, I'm constantly leveling up, constantly learning more and more. So it's really good to have all that information that I can constantly provide for you guys. So it is a one-time fee when it launches. The price is not, we haven't really came up with the price. What we're gonna do is probably gonna be like $200 to $300 when it launches. And then after it launches, after the first week of launch, we're gonna probably have it around $800 because there is a lot of value in it. I'm telling you guys, if you go through this course and you go over everything that I'm going into, you are going to get value from it. But I don't want to keep telling you guys about the course, all this stuff. Let's go into my computer. I'll see you guys in just a second.
Let's go.
All right, guys, let's get into it. I want to show you exactly what happened on my before, my after, everything we went into. So I actually do have a masterclass, a group chat where I tell everyone like what I'm looking at every single day in the markets, all that good stuff. So this was, where did I call it out? Okay, perfect. So it was right here. And I'm telling you guys, like, there's a lot of great information. It isn't just where we call out trades in this group chat. We do team calls every Tuesday and Thursday. We have one-on-one calls with each student. So I do one-on-one calls with each student 2 times a month. They're 30-minute calls. So this was the before. I told everyone, look, I'm going short on US 30, the Dow Jones, obviously. This was the before, and this was the after. So you guys can see that we went down to the zone. We ended up actually catching 6,500 pips on this trade right here. So really profitable trade. You guys can see that this is where we ended up closing our profits, right down here at this zone. So my charts are different. I had the black background, but we're going to go into it right now. So this is what we were looking at right here. Really the overall determining factor that made me realize like, yo, we're most likely going to see a short at some point very soon. As I was on the hour 4 chart And I saw that we had this big zone of resistance right here. We had hit it in the past right here, and right here, and right here. But I want you guys to notice that every time that we hit this zone, we didn't go as high as we did the previous time. So you guys can see right here, we hit this zone, but I want you guys to look at the wick. As we look at the wick right here, you need to be very, very precise with this. So we're gonna make this super precise. Top of the wick right there, you can see that this wick is higher than this wick right here. And then our last retest to this zone, we hit it right here. So every time that we hit this zone in particular, it didn't hit or didn't retest the previous higher high as it did the times after that it hit this zone. So hit it right here, didn't get as high as right here, and then we hit it for the last time right here. So this is a triple top. So usually when you see a point of resistance, support, a trend line, when it hits it 3 different times, that's overall going to tell us that we're going to see a rejection, and we're going to see the market go the opposite direction that we've been intending to go. So we hit it 3 times. Our third tap was when we actually really broke through the support right here, because we were at this point of support that we were testing, rejected, retest again, retest to the resistance, and then finally broke through it right here. So that's what I saw right there. I saw that we had this reversal candle right here. I would honestly call that a hammerhead candle as we're looking. And I'm telling you guys, when I'm trading, I'm really, really looking at the candles, how they're opening, how they're closing. So that was really what gave me confirmation. As I saw this candle, I was like, you know what? This candle is going to close in 2 hours. We honestly aren't going to probably see it drop or go any further up. We're going to drop it short. And we had a really tight stop loss. I think we had like 1,000 pips stop loss on that trade right there. And then we went for 5,600 pips on this trade right here. So just off this one trade, we were able to really capitalize. And one thing that I did as well is I was comparing multiple time frames. So really what gave me confirmation, this is what you guys need to be looking for when you're trading, is whenever we have a reversal candle, usually you need to make sure that the candle after the reversal candle closes in the direction that we want. So we had a reversal candle right here, and then this candle right after it. This is when we really got confirmation that the market was going to tank, is when we saw this bearish candle close. We did break the support on the previous candle right here, and that also gave us confirmation. So usually we'll see a reversal candle like a spinning top, hammerhead, doji, something like that, and then we're looking for the next candle after to really give us that ultimate final confirmation that, okay, we're going to drop in, we're going to see the market go down to this zone or wherever we predict the market to go to. So once we saw this candle close bearish, I was like, you know what? Let's run it. Let's go. We're going to keep seeing a drop right here, and it ended up tanking. Came to our 50 MA, kind of retested the 50 MA, then even broke down to previous or lower supports right here. Also, I want to spot this out to you guys. Let me highlight the actual move so it's easier to find when we move to the M5. Okay. On the minute 5, you guys can see that this is overall where the drop started. Okay. So we had a come and hit, and I want you guys to notice as well, we have this resistance right here. Tested it, rejected it, started coming down to a downtrend. We had a lower low, lower high, lower low, lower high. This was like our final lower high right here before it really broke down. Once it broke this support, it just started running, forming new lower lows, lower highs, lower low, lower high, lower low, lower high. So I want to really give you guys kind of like a hack right now. Let me delete this so it's more clear. As you see the market forming lower lows and lower highs, or higher lows and higher highs, these are perfect opportunities to bring out the fibs, and this is where you can actually capitalize on getting more entries. So this is how we're going to do it. We're going to go from this lower high to this lower low, and we're going to bring the fibs. And when we do it, we're going to go from this lower high to this lower low, extend into the future, and ultimately the zones that we're looking for to see a retrace from are the 618, the 705, and the 79. I showed you guys my exact fib layout on my previous video, so you guys can go back to that video that we did yesterday before this video, and you can see exactly my coordinates, all that good stuff. You guys can see we hit this lower low, lower high, and boom, we came and retested the 618. Right after it hit it, we had a bearish engulfing. What did it do? Formed a new lower low. So now it's like, okay, perfect. We could have added an entry right here. Next thing that we could have done too is we have this lower high that we got an entry on, but now we have a new lower low. So we could have brought the fibs up again right here to this lower high, to this new lower low, and we're waiting for a retrace again. Boom. What did it do? Hit the 618 level once again. So this is another entry that we could have got right there. Okay, let's keep going with it. Let's see. We're going to bring the fibs from this lower high to this lower low. I'm going to go from this wick right here because this one is kind of deep, and I think that the fibs are going to test a little bit higher than the 705. So let's go from this wick right here to this lower low. And boom, we can see once again it hit the 618, 705, and the 79, and we even have that reversal candle. And what I mean by reversal candles, like an easy way to spot reversal candles, let me delete this, is by looking at the wicks of the candle. So look at this candle I'm about to highlight right here. You guys see that wick right there? We have that very long wick. So a saying that I go by is wicks to the top, it's going to drop. Wicks to the bottom, it's going to go up. So we had a retrace, hit the 7.9 level on the fibs. What did it do after that? Formed a new lower low. Then we even have a lower high right here. So this is like another time we could have caught an entry right here, right here, right here, right here. And we could even catch one right here. Guaranteed it's going to hit the 7.9 level right here as we bring the fibs. So we already got this level. So we're going to go from this lower high to this lower low right here. And we're going to get this wick, not the lowest one. Okay, let's run it up. Boom. What did it do? Hit the 618. And this is really what you want to be looking for. Is a lot of times when I'm trading, I'm in the markets. I'm just staring at my screen. I'm like, all right, perfect. Let's see what's going to happen right now. We had a lower low. Obviously, we're already in a downtrend. Like, most likely, it's going to form a lower high right around our level on the fibs. And this is how you can get those fucking nice, real nice entries, because you guys can see right here, we have these wicks. Like, this is really what you want to do when you're trading, is get these wick entries where you see it go up to these levels, execute a short position, or you have a sell limit, and then it gets those nice wick entries. So what did it do? Hit the 618, came back down to previous support right here, retested it one more time, so we have a double top right here, and then after that, rejected that zone once again, broke through it. Okay, then it just started falling from there, came into this zone of consolidation. It was just like consolidating for a really long time. So this is when like our shorts were actually, we executed our where we closed the position right here, was when it started to consolidate. So usually when you see a big zone of consolidation like this, that means that another big break is about to happen. So the more that the market consolidates, that's telling us like, yo, something big is going to fucking happen soon. And at the end of the day, the trend is your friend. So when we're looking at it, we're like, damn it, we're already in a downtrend. Like, do you think it's really just going to shoot up after dropping 5,600 pips? No. So what did it do? Came to consolidate, retested, stopped everyone out. Because they knew, the market makers knew there was some freaking sellers still in the market, and they trailed their stops all the way down here. They're like, all right, perfect. All these retail traders right now, they think that right here at this point of resistance, that's where they have their stop. So the market makers are like, do you know what? Fuck you guys. Bink hit it. Bink went higher, and everyone's like, damn, like it's going into an uptrend now. What happened? Broke below this resistance, became support, dropped to the freaking floor. So now that's all I wanted to show you guys. Really beautiful setup. And I want to let you guys know that I actually have this set as my background on my phone. What does it say? Let me find this. I have all these notifications. Okay, one good trade at a time, and 6 months from now, you could be in a totally different place financially. One good trade at a time. That was that one good trade. And I think it's so crazy because I'm pretty sure a lot of you have $1,000 that you could put into a trading account. One trade like this, you could have made $560. I know in the beginning of the video I said it like we caught 4,500 pips, but we ended up catching 5,600 pips at the end of it. And that one trade, you could have literally did a 50% ROI in your account. Now let's think more long term. Like I said, one good trade at a time, 6 months down the road, you could be in a totally different place financially. What if you had $100,000 in your account? Bruh, you would have just made 50K off one trade. That's most people's salaries that's working a 9 to 5 job. A lot of people don't even make that much money in a year. So to be able to do that in one trade, I just really want you guys to think more long term, because a lot of you are probably like, oh, let's get rich like Forex. Yeah, I see all these people winning, getting rich. Like, I'm going to do the same thing. Nah, false. That's fucking not, like, you guys can't think that way. You need to think long term, okay? So really appreciate you guys tuning in this video. If you guys haven't subscribed, definitely do. If you guys are more on the side where you don't have a lot of money to invest, you're like, Colt, I don't know if I could get your courses dropping. That's fine. I'm a really generous person, and what I've done is I put together a link tree of all the free stuff that I have. So that is also in the description. I made a free course. There's a trading journal. There's a group chat. A bunch of free stuff that I put together. But guys, I'll see you on the next video. Let's get it.